Join us this Saturday as we have 4 action-packed webinars coming your way. The first one deals with how to set goals. Setting goals is the first step in the investment journey, and this is a very important process to get to your final destination. The second webinar of the day we have coming for you is based on how the US-based pharma companies are driving the stock market rally. Want to know more about valuations and how their product have been priced? Join us for this webinar. For the third webinar of the day, we have a very interesting take on the 60-40 investment portfolio. 60% equities, 40% bonds have been an investment portfolio since many years. You want to know how this portfolio can be structured? Join us for the webinar. For the last webinar of the day, we'd explore how to build a goal-based investment portfolio. Are you someone who have your goals set and want to know how to start your investment journey? Join us for this action-packed webinar.
Five trends driving this market. In this market context, I see 5 top trends driving this market. Liquidity is forcing the hand of large institutional investors in multiple ways. It is also forcing the hand of the retail investor on a completely different plane. The anxiety to invest is at its highest. The anxiety to remain invested is also extremely strong. Nobody wants to be in cash because in a rising market, people are worried that the cash will affect their last mile investment performance. In a bull market, the last mile investment performance should hardly matter. Actually, if you are a conservative investor, you will probably leave that last mile investment performance to somebody who is taking such risks that you would not be comfortable with. But even conservative investors are not in that mood. They think that that phase of last mile investing is still some distance away. So we are in one way convincing ourselves not to precipitate anything in this market and to just go with the flow. So what are we doing in the process? One, we are not selling at all. Most mutual funds hardly sell anything because the reinvestment risk is worrying them. They have liquidity already. A lot of mutual funds are sitting on 15% cash and struggling to invest. So they don't want to add to this cash pile. So they don't want to sell at all. So stocks that are rising don't face the risk of institutional selling, and that in turn is actually contributing to that rise. And because there is no selling, it is also abetting or favoring the charts. So the technicals are also looking better. So not selling at all is the first trend driving this market. The second trend driving this market is buying at any price. Assume somebody brought out a defense themed fund. He's getting flows. He's continuously buying those stocks. This happens in thematic industries all the more because the flows can be crazy and people have to buy. While we speak, it could be happening in the IT funds, the tech funds. It could also be happening in the infra funds. So it could be happening in several thematic funds where flows are making institutional managers buy at any price. Now this is also quite ironic because people who are investing in these thematic funds are doing it in index funds in the theme and thinking that indexing is a safe way of investing. It couldn't have got more subverted than this, but that's the reality. Now, when you are not selling at all and when you are buying at any price, in several themes, what happens is the third trend. The first trend is not selling at all, the second is buying at any price, the third trend is cornering of the float. Now, there is hardly any float in several of these thematic favorites. Promoter stake is already high, so promoters are not really coming in and selling, especially if it's a government, that sale is not happening. So, defense and railways, government is not coming out and selling anything or not selling as much as there is appetite for those stocks. Liquidity is coming into these themes and the float is further getting cornered by the continuous investment actions of these ETFs, thematic funds, large investors and mutual funds. So, this is how the cornering of float has been happening. The fourth trend is the promoters are selling and institutions are buying. You are seeing a lot of these OFS or QIPs happening. Promoters are comfortably selling large blocks in companies and institutions are buying. When I say institution, it is insurance, mutual funds, PMS and the likes, AIF also. So, institutions want to buy this because the impact cost in this market is so high, they rather go and buy a block from whoever is willing to supply them the block. It could be promoter, it could be venture capitalists who seem to be having a roaring exit party in this market. It could be in other FIIs. So, any seller meets more than the desired number of buyers. So, the demand is actually higher than the supply. So, book building is happening in many of these and there is some allotment dynamics and people are actually struggling to get allotments in these sales. So, it is very easy for promoters to sell because institutions are willing to buy. The last trend which is driving this market is the technicals are getting played. What do I mean by this? I mean that because you are not seeing much selling, domestic mutual funds are not selling at all. Also, a lot of buying is happening at any price, either through the ETF or through the mutual fund or maybe even through other structures like the PMS and the AIF. Buying at any price is happening. Float is getting cornered, which is the third trend. Large blocks are being exchanged and once that exchange is happening, everybody knows that the selling is over and at that point the technicals are getting played. So, the buyers continue to buy and take the stock price up very quickly. You would have noticed in many stocks that after a block is done, the chart takes a northern lift. You will see it go right up. That lift is basically manipulation of technicals. Who is doing it and what do they do after that? I don't want to do any guesswork, it is for you to find out, but clearly the technicals are getting played after all these things play out. So, that is the large picture, that is the last in the sequence of big trends. So, these are the 5 big trends. Institutions are not selling at all, they are buying at any price, they are cornering float, promoters sell, institutions buy, that is how blocks get exchanged, and lastly technicals are getting played. This is a very interesting market, but is this a sustainable market? Only time will tell. I thought I would just bring to light what I sense is going on in this market. Thank you for watching this video.